Hello, welcome, Happy New Year. This is my first trading day back. It's Monday the 4th of January. I just want to go through a couple of trades that I did today. I had a lot of messages waiting for me when I came back from the Christmas New Year vacation. So I took my sweet time this morning. I didn't announce any trades in the Telegram channel. So it wasn't until this afternoon. And this was the trade that never came. At about an hour and 15 minutes into the US trading session, I called an alert to say get short for a NASDAQ position. And it was rather odd because I called this trade right here. So I called a trade in the NASDAQ around 12,875. And the reason why I did that is because we had a fairly contained range. And then once the market opened at 2:30 in the afternoon UK time, we had what I call two significant bear bars, followed by a rally that never materialized anything and a new low. So at this point here, you could argue that this is a double bottom. But the reason why I would prefer to sell short the overhead resistance up here was because of these two bars here. I have to accept that there was a double bottom, but sort of reading in between the lines and reading the price action, I felt the short side was the side I wanted to be on. That's why I called it here. But what's interesting here is that once I was ready to call the trade, the way I execute trades is that I see it, I call it, I execute it myself, and then I post it. But it went so quick that I actually never had an earthly chance. I wanted to call it around here, and by the time I actually got around to placing it, which usually only is about 5 seconds, but the pace by which NASDAQ fell today was so ferocious. But it wasn't all bad news, because I also called a short position in the DAX around 2 minutes later. And I did that right here. And this is something I've trained myself to do over and over and been very conscious about. That is, when you have a trend day, which this seems to be, if you place a short position here, you're going to feel like you need a stop loss up here. And that depends on your perspective of technical analysis. You could have a stop loss up here. You could also have a stop loss here. Hell, you could even zoom out on a 15-minute chart and then say, I'm going to have a stop loss up here. And my stop loss in this case was about here, and my entry was about here. And I got lucky in the DAX, but I had to live through the market bouncing quite significantly. In fact, my entry was here, and at that point here, I had no more than 8-10 points in profit. I had moved my stop loss to break even at this point. However, I had at its best been nearly 90 points in profit. Good things to those who wait, they say. I didn't get out here. I had hoped that these two significant bull bars wouldn't materialize into anything meaningful or significant. And they didn't. But when I then saw this bull bar close at its high, I thought I better get out. And that seemed to, well, so far have been the right decision. Right, so two trades. One was called, made 111 points. The other one would have made a few hundred points, but it never came because the market moved that fast. And the reason why I'm doing that is because I don't want to be the guy who calls out a short signal at, say, 875, but the people who are trying to react on it can't get in until 850 or 825. It's not fair on anyone. Then I'd rather not make the call, even though I took the trade myself. Right, well, this is the first time I've tried this. Let's see how it goes. Happy New Year.